This is Trader's Workshop with Adam H. Grimes. Hello, welcome to episode 3 of Trader's Workshop. I'm your host, Adam Grimes. You should already be following me on Twitter at Adam H. Grimes, so go do that if you're not. So this episode is titled How to Get Started. Where to begin? The beginner's episode, right? And this is an episode that I wanted to do with the old podcast, and frankly, I struggled with for many reasons. The biggest reason is because I think beginning to learn to trade is quite a difficult thing. And it's made even more difficult because there's so much bad information out there targeted to beginning traders. We're going to talk more about that in a minute. But I think what you'll see here is a distinctly different perspective. And also, we should say, who is this episode for? Well, it is truly for beginning traders. If you have not placed your first trade, if you're poking around the internet and you found some material to, how to learn to trade, trading teachers, and you found me in that mix, this is for you, absolutely for you. It's also for you if you've been trading for 1, 2, 10, 20 years and you've been struggling. Maybe you've had some success, but you haven't had the consistency. You haven't reached the consistent profitability you want. This episode is also for you. This is think of it as an invitation to return to that beginner's mind, which I think is a very valuable thing. Also for developing traders, now I think you should be careful. Let's say you have many of the pieces in place that I'm talking about, and you've had some considerable degree of success. I think you're going to find things of value here, but I think you want to be a little bit careful about changing too quickly. It's one of the problems people get. Once you start to have some success, it's very easy to kind of be distracted by the next shiny idea and to run from idea to idea. And that's not such a good idea. You really want to try to build consistency, but there's no point doing that, especially at the beginning. If you haven't really found something that clicks, then you should be in the mindset to change a lot. So I have a number of points here today. Actually, I have 6 points, which seems like a lot for the podcast. Here they are. Then we'll dig into them. What do you need to get started? You need realistic expectations. You need to know the game, and you'll see some of these have quite a bit of overlap. You need to be prepared to treat your trading as a business. You need some basic market education. You absolutely need a method, a methodology, a trading system, a trading approach, and you need the right mindset. All of this is tied together. Obviously, that ties back into one. So let's begin with 1, realistic expectations. If you are somebody who has never placed a trade, you're going to find a lot of books, a lot of blogs, a lot of people selling you services that will claim you can learn to trade in a few weeks to a few months. And the way they do this is by horrifically oversimplifying the skill required, the discipline of trading, to the point where it just doesn't work. For instance, my business partner, Tom, was watching a video and a guy was talking about the money line, which was nothing more than a moving average. And all he had done was, and I know this because Tom, it was a long video and he watched it over the course of several days, and he would keep calling me and saying, I can't believe this garbage. I can't believe that people are putting out something that's so dishonest. You can't simply buy when price crosses a moving average, and you can test that. But at the very least, be suspicious of that. Do you think if there was some magical line you could put on a chart and you just bought when it went above that line, can it really be that easy? Ask yourself that kind of as a gut check. Well, it can't. But this person is selling thousands of courses that cost thousands of dollars to beginning traders who don't know any better. And you'll see the same thing with different patterns. Sometimes it's obviously somebody nefariously scamming. It also can be somebody who is very well intentioned. You could have another beginning trader who maybe they learned information from somebody else. Yeah, look, I said information without without the quotes, but they learned an idea from someplace else and they sincerely believe in it. Maybe this beginning trader himself or herself was struggling, and then they did something a little bit different and the results are a little bit better, so they truly believe it works. And you'll see lots of things in trading forums where people drop ideas that just simply don't work. So you need the expectation that this is not going to be easy. For you to develop the skills of trading, it's going to take 3 to 5 years. And I have never seen, over the course of working with literally thousands of traders in many different settings, I have never seen anybody significantly shortcut that. I have a trader that I'm working with coaching now who came to me pretty much just out of college, no trading experience, and into his first year in the game, he's having some pretty good success. And he's very pleased. He's putting up good numbers. And, I'm happy to see that. But I am constantly, I hate to be the Grinch, or the voice of negativity, but I am constantly gently reminding him that it really takes multiple years to assimilate all of these skills. And he needs to know this because, once you're 6 months or a year in and you put up some good numbers and then you start to hit a rough spot, how do you feel about that? Well, if you don't know any better, you feel pretty crappy about that. Been there, done that. I can tell you, it feels like a dark place. You start to doubt, can I succeed? But if you know, this is just kind of the normal cycle, and it's the part of the normal cycle that sucks, but I realistically cannot expect to make consistent money inside of 3 to 5 years. And now you might also think, okay, well, Adam, what if I am a systematic trader? What if I have a clean set of rules, something I backtest and then I trade? Even then, I think what you're in, we'll talk about that in a moment. I think even then people downplay, maybe unintentionally, the emotional complexities, let's say behavioral complexities of trading even a purely systematic approach. So it takes 3 to 5 years, and you're probably not really a veteran until you've lived through a complete market cycle, which takes most of 10, but you may make some good money after that initial learning curve of 3 to 5 years. You also need to have a clear and realistic understanding of the nature of trading. This is a major theme of my work, so I'm not going to talk too long about this now, but what you need to know is that this is a really competitive environment. It's a really competitive business. You have, by some measure, some of the most intelligent people in the world, and some firms that hire a lot of the most intelligent people in the world that have a lot of money coming into this battlefield of the marketplace trying to make money every day. They're trying to take money from you. You're trying to take money from them. It's not easy. And so if you are going to succeed in this kind of goes back to that other point. You're not going to do it by buying a stock when it crosses the magic blue money line. That does not work. That crap does not work. And it's the problem is, the reason I get so angry about it is because I see all of these beginning traders struggle with things that just simply don't work. And then the trader, so he works diligently for maybe even several years and throws in the towel and says, I guess I can't be a trader and I'll find something else to do. Well, that's okay. That's kind of life. You find out things you don't want to do and things that you can't do and then you know where to focus your passion and your attention. That's valuable, but maybe that trader could have had a much better chance of success if he had a more realistic understanding of the game. Number 2, know the game. So as I said, this is a very competitive environment. It's like if you walk into a card game someplace, you got to be able to assess that room, right? Are you the guy who's going to be donating all night? And if you start trading, you are. And if you have overly simplistic ways of thinking the market works, for instance, thinking you're going to just make trading decisions, short-term trading decisions based on what an earnings report is, I don't think you're going to be successful like that. I think that if you're using and doing the same thing that a lot of other people are doing in a very competitive game, you're not likely to have any enduring success. Yeah, you will will make some money, but you're not going to build a consistent pile of money. And this really gets us to thinking about how you will win. Well, how you will win is you will find a statistical edge in the marketplace. Now, you may not use that word. You may not be a number geek like I am. You may not be excited about statistics. You may be somebody who kind of recoils at thoughts of averages and standard deviations and confidence intervals, and you just don't want to think like that. That's okay. And there are traders who succeed without getting into the numbers like that. But what they do is they develop an understanding of the probabilities. Just like maybe, could you believe that you have some old hand poker players who are very good, who might not be able to quote you all the stats, but they know, right? They've played the game long enough that they know. And with poker is I don't truly play the game, so I don't claim to have a deep understanding of the game, but it is a finite, if very large, but it's a finite world. The world of financial markets is almost in many ways unbounded. Yeah, by that I mean like you can have all of these events that there's almost no defining what is possible in financial markets. And there's no truly understanding who the participants are. There's no truly understanding how the game evolves. So in some ways, it's a much richer and much more complex game. But and my argument here is that I think you're probably going to have a difficult time just trading long enough until you develop that intuitive sense of the probabilities, where you might be able to do that in other games. I think if you're going to succeed, I don't know, there probably is somebody who's an exception, but I think if you're going to succeed in this business, you have to cultivate an almost scientific mindset. And that's the last point we'll get to here. All of this drives us to treating trading as a business. And here's one of the big mistakes. As I've said in other podcasts, I've been hanging out in some Facebook groups, and I've seen some horrific things. I've seen some absolutely inexplicable things, like somebody bought a stock without really having a plan, and the stock collapses 25% because she didn't know she was buying in front of earnings, I believe is what happened. And so she asked this group, what should I do? My answer was, what was your plan? And if you did not have a plan, well, this is a teachable moment. And what you get from this is, in the future, you need to have a plan. What you certainly need to do now is limit the risk. Instead, what all the people in the group told her to do, well, there were a lot of, frankly, stupid suggestions, but one of what I thought was the dumbest suggestion was to sell calls. Write calls against your stock. So what you've done is cushioned maybe an additional, 3 to 5% of the downside. And then if the stock goes back up, you've locked in your loss because your stock's going to get called away down there. Really makes no sense whatsoever. But, this was told with great authority. And that's just one illustration. I could write a book. I write a coffee table book of the poor advice that beginning and struggling traders get. But I think probably the worst mistake a beginning trader can make is not really understanding that this is a game where you're going to do the same thing over and over and over. Now, you can come to the market for any reason. Let's say somebody gives you $500 for your birthday. You can come to the market and you can say, it's the same thing going to Vegas and put it all on red. You can definitely do that. You can buy out of the money calls. You can find whatever the current, I think people are paying a lot of attention to cannabis stocks. You can try to find whatever 5-cent stock that you can buy 50 bazillion shares of. Everybody likes to buy a lot of shares of something because they like to pay a lot of commission, I guess. I don't really know why. I think I understand the mindset, but it's mistaken. People are looking to hit the home run, but then they don't think about it. What happens? Okay, you put that $500 down, and let's say you get really, really lucky and you turn that $500 into $25,000 in a day. It's possible. It certainly is possible. Now what happens? Well, what happens is you've just had a learning experience, and you've just learned that when I make big bets, I get big pay. So what are you going to do? Do you think you're going to hold on to all of that $20,000? I suppose if you had the discipline to know that I got incredibly lucky, and this person probably does exist somewhere, if you know, okay, I got incredibly lucky, I made my $525,000, whatever crazy number I said, I'm never ever going to trade again. That's probably the right mindset. But instead, what you're more likely to do is to spend a lifetime trying to recreate that experience. People go in looking for tips. They go in looking for somebody, some guru who, by the way, is probably lying about their success, some guru in some group to tell them what stock to buy. Even if that works, is that repeatable? Is that something you can do over and over, hundreds, thousands of times over the next 10, 20, 30, 50 years? In other words, can you build a career on it? Now, maybe you're saying, Adam, I don't want to build a career trading. Okay, and I think a lot of people think they want to build a career trading when they probably shouldn't. So I absolutely would support that. But what you want to do is to build a business around trading, even if it's a little side business. And you want that business to make money. You want that business to make some kind of reliable money. And we have, let me footnote the word reliable. Reliable could very well mean that you lose money for a year and a half and then you make all your money in 6 months and that you repeat that over and over. But you want to be able to do that for decades. Reliable could mean that you pretty much make money every month. That's another definition of reliable. And if what I just said kind of has you scratching your head, just know that there are lots of different ways to construct trading systems and to take money out of the market. And reliable doesn't necessarily mean what we think it would mean in casual conversation, that many trading systems have fairly uncertain returns. But you must think of this if you're going to have any kind of success. To my way of thinking, if there's any reason for you to do this, then you must think of it as a business. You must think of it as a repeatable process. And all I mean by process here is something you can do. That word process, I think, is a very important word. But all I'm saying here is you figure out something you can do, and then you figure out how to figure that out so it's something that you can repeat. I don't want you to get lucky once and make a lot of money. In fact, I think you're probably in trouble if you do that. I want you to figure out how you can do the same thing over and over and over, and over the course of many trades, get lucky a little more often than you get unlucky and end up making money. That's how you want to think about building this business. So right away, that pushes you away from looking for tips. It pushes you away from the big win, and it starts to make you really ask the question, okay, I'm going to open any business. How am I going to make money? That's important, right? If I open a restaurant, I'm going to have a good menu. I'm going to have great service. I'm going to have a very attractive dining room. If I open a clothing store, I'm going to have fine fabric. I'm going to have fashion that's on point. If I open a personal training business, I'm going to be able to communicate and help my clients. I'm going to be accessible to my clients. So you think about these things. What are you going to do that will give you a little bit of edge over what everybody else is going to do? And when I say edge, I just mean a way that you're going to make money. And by the way, if you are coming to this as a complete beginner, the trading world can seem horribly complex and confusing. And I would argue it's really not as complex as it seems. Compared to many other disciplines, the body of knowledge you need to trade is not particularly extensive, yet it is quite difficult to be successful trading. But just know if you're looking at this and you're thinking it's so complicated, it's not as complicated as you think. And I do think that it's very useful to think about other businesses, to think about things that you can touch. It's not insulting to think about economic problems in like a shoe business or something. The idea of a very concrete product that we can buy and the price of that thing changes and then we sell. A lot of times that's much easier to understand than thinking about a share of a stock, a share of a company, or a futures contract, or heaven forbid, an options contract. So we get all of these chains of complexity, but it really goes back to buying and selling something and trying to profit from those transactions. That's an important way to think about it. Okay, so point 4, what do you need? Basic education. Now, I'm going to tell you where to get what I believe is one of the best resources to get a basic education. I want you to go to my website, marketlifetrading.com, and I have an extensive free trading course there. It covers a lot of this in 30 hours of video, hundreds of pages of PDFs. And what it will really do is take you from being a complete beginner to having a pretty good clue. And we've completely revamped the trading course. First version was several years ago. Thousands, easily more than 10,000 traders have been through the course. And the success stories that I have heard are just absolutely incredible. I can't believe, I knew I was putting out good material, but I am still amazed to hear the difference that it's made for some traders. Now, it asks a lot of you. It is not easy. I'm not going to show you where to buy when price crosses the magic blue money line. And shouldn't the money line be green anyway? I mean, is that my US-centric mindset? I think the money line should be green. We'll pretend it's green. There's no magic money line, but what I'm going to show you is how to build a framework where you start to understand probabilities, start to understand how markets move. You start to look at how markets move and understand how to look at markets move. And here's another piece of education you need. If you don't want to go do that trading course, I think you should. marketlifetrading.com. But if you don't want to do it, then at least you need to educate yourself on what you can trade and the different ways you can trade. And what you can trade would be what we would call asset classes. So you're looking at things like shares of stock that I mentioned. You can also trade currencies, different exchange rates between different countries like US and Japan, US and the EU, Europe. You also can trade commodities. So you can trade corn, you can trade gold, you can trade copper, and many of these are traded in the form of futures or forwards. That brings in another complexity, but it's not as complex as it seems. And you also can trade options. And I do think for a beginner, frankly, I think everybody should trade options. Everybody should learn to think about trading options, because options make us think about probabilities and payoffs and outcomes in a way that's very constructive. But I think for the beginner, it probably adds some layers of complexity that you're best off avoiding. Even if you want to be an options trader, probably makes sense to spend some time thinking about simpler instruments first, because you will gain a lot of intuition about how options will respond if you understand how the underlyings move. And if what I said just kind of went too far out on the edge there, just avoid options at the beginning. And at the beginning, I would mean for the first few months. So I'm not saying you need to be an expert trader before you ever touch options. Absolutely not. You also want to think about how people trade. So we talked about having something that you can do over and over that's a way that you can take money out of the market. And a very simple way to think about this would be directional trading. So we buy something and we hope to sell it when it's more expensive. Or we can actually do the reverse. We can sell it first and then buy it back later. It's called selling short. And it seems a little bit complex, but it's not. Most of you listening to this are probably quite comfortable with that. If you aren't, just know it's not that difficult. It's just basically turning buying upside down. You sell first. You want to buy low, sell high, right? Well, in shorting, what we want to do is sell high and then buy it lower. So you're just flipping the time on those. You still basically want the same thing. Everybody understands that relatively quickly, but there are other ways to trade. For instance, we can trade relative value. And a lot of institutional trading is done in this way. So what we would do is, for instance, let's say we have two companies that make computers. And we think that one company is a much better company, so we think their stock will go up faster. So what we can actually do is trade the relationship between those two companies. So you're not really making a bet whether they go up or down, but you're making a bet that the company that you think is better will do better than the other company. And there are ways to structure that trade. That's a very simplistic example, but at its core, this idea of relative value trading is simple. You're looking to trade the value of something against the value of something else. And you might argue, actually, a lot of currency trading is this, and people don't even think about it because we just think about these things directionally. And probably the third way that people trade is, I think it really comes down to these three ways: directional trading, relative value trading, and then trading volatility. And again, that takes us into options. That takes us out of the scope of this podcast, but not out of the scope of future podcasts. We're going to be covering a lot of stuff on options. Now, this brings us into methods. And this is point 5. You need a method, and you need to find your method. And again, my trading course, marketlifetrading.com, will help you develop a technical method if that's what you want. Be aware that methods generally fall into one of two categories. We would say technical or fundamental. And technical means that you are making trading decisions based on things that happened to the price of the thing in the past. That's kind of maybe it's a convoluted way to say it. You're making trading decisions based on information contained in the price movements themselves. A very simple example would be if I see something is going up and my rigorously researched trading methodology tells me when this happens in this way, and we'd have some other characteristics, that it will continue to go up. So I could buy it thinking that I'm going to be able to buy it here and sell it higher. Another example of a technical trading system, kind of broad strokes, would be, what if something goes up a lot? And I have conditions that tell me when something goes up like this much, this fast over this time, so we're kind of measuring the velocity maybe, it tends to stop and come down. Under that situation, I could then short it, right? I could sell it when it's really high and look to buy it back lower. Now, of course, anything we do like this, we're going to have a range of outcomes. We're going to have some winners, we're going to have some losers, and that's part of the task of developing a trading system. And it might not even, so and you're probably thinking, okay, well, I just need to develop a system where I win more than I lose. That's not exactly true, because think about this. What if you had something where you lost a lot more than you won? Let's say you only win 25% of the time, but when you win a lot. And when you lose, you don't lose very much. That could certainly be profitable, right? And you also could imagine turning that on its head. What if we had something where you won almost all the time, but when you win a little bit of money? That seems good, right? We'd be happy to make just a little bit of money, but to make that money very consistently. But what if when you lose, which is rare, it doesn't happen often at all, but what if when you lose, it is a gigantic win? You could see, and you can imagine kind of playing with those numbers, that it would be possible to construct something where you win almost all the time, and yet you still lose money over a large sample of trades. Because that's how you have to think, right? I've said that several times. You don't think about doing this once. You think about doing it hundreds, thousands, tens of thousands of times, even in some cases. And that law of large numbers kind of, it is a law that kind of pulls us back to, I'm trying to be careful what words I use here, that underlying average performance. And it's for those of you who think quantitatively in a rigorous way, you're probably not very happy with what I just said, but you get the idea. So it's important to have a system where if we do a lot of trades, our pile of winning money is bigger than our pile of the money we lost. That's the goal. And we can get there in a lot of different ways. So technical systems, which make their decisions based on things that happened in the price, that's one way to do it. The other is fundamental. And when we look at fundamentals, we look at value. We try to understand, we might understand, for instance, well, I have this company and it makes this item, it costs it this much to make this item. I think this is going to change in the future. Maybe one of their costs is going to get cheaper. Maybe they're opening up into a new market. Maybe on the other hand, they have a competitor that's going to do really well and it will hurt this company. So we try to understand how the future of a company or a country, if we're looking at currencies and interest rates, or a commodity, maybe we want to know how much corn people are planting, what the weather's like, where that corn is going to be used and sold and shipped and what might impact that. And that'll give us some idea what might change the price of corn. So understanding those things that go into, that stand behind the value of something, that is what we mean by fundamental analysis. And both are certainly viable. But I will say this, if you're working on developing a trading system, what you will probably find is that fundamentals your trades work on a longer time. You need to think about how often you want to trade. Do you want to be a person who makes 5 trades a day? Do you want to be a person who makes 5 trades a month? Do you want to be somewhere in the middle? Do you want to be a person who makes 2 trades a year? Well, you can do all of this, but as you move out, so you're doing fewer trades, you get less data, you get less reinforcement. Now, this does not mean that you're better off doing as many trades as possible. Some people will tell you that as a beginner. I strongly disagree with that because I think most beginners, most traders in general, find the best edge kind of trading in trades that last a few days to a few weeks. That's a sweet spot for many people for various reasons. You start to do many trades a day, you have certain problems. You start to do only a few trades a month, then you have certain problems. But if you're using fundamentals, this fundamental data does not come out very often. For instance, most stocks release most of their information 4 times a year. So if you have information that comes out quarterly, 4 times a year, every 3 months, do you really think you're going to be able to trade off of that information and only hold trades a few days? Or do you think it's most likely that you're going to trade off of that information and hold trades for months? Number 2 is much more likely. People are very sloppy with their terminology. Like some people will tell you, oh, I trade short-term fundamentals. No, you don't. What they do when they say that, people just don't think. What you're doing is you're waiting for a fundamental report to come out and then for the market to make volatile moves, and they're trading technical patterns around that. You're not trading fundamentals. That's not trading fundamentals. Anybody who tells you they trade short-term fundamentals, ask that person if they've ever built a fundamental model. And they'll tell you no, if they're being honest. You don't trade short-term fundamentals. You can trade short-term reactions to fundamentals, but then what you're actually trading is the price movement itself. You're trading technicals. So you do need to have a method. Again, my course shows you one way to get there. There are a lot of different ways to make money in the market. Many, many, many. And when I say that, it almost understates it. I think there are probably thousands of ways to make money in the market, but they're all hard to find, which seems like a very strange thing, and they're hard to implement. They're hard to do. The behavioral challenges, as I said, are pretty extreme. You can certainly, absolutely have a viable system with a strong edge and not be able to trade it for various reasons. But if you don't have that method, if you're relying on the magic green money line, then you don't stand a chance. You have to have some system that has some statistical edge. And those are concepts we're going to talk about much more in podcast episodes coming up soon. Last, right mindset. Well, that's really what this entire episode has been about, right? This mindset of thinking about your trading as a business, thinking about your trading as over large samples rather than one big win. And so you're not just getting lucky with some great call and some 5-cent pot stock. Thinking about how competitive this business is. And if you understand that, you understand that nobody's going to give you money. You're not going to be able to just find some very simplistic system that makes you consistent money. That's not realistic, though. Ironically, I do think that, and I know that rather simple things work, but implementing those is not simple. This is a business that's filled with all kinds of contradictions, and I'm going to work to help you tease some of those apart. And then the last thing is really cultivating an evidence-based approach, almost a scientific mindset. And that, my friends, is what the next episode is about. So we're going to wrap up here today. I do want you to go check out marketlifetrading.com if you've not already. We do have some paid services there, and you'll see you'll get to see some of my daily market analysis. You get to see some of the analytical tools that I use, types of patterns I trade, and that's a great service if it works for you, if it fits where you are in your trading journey, and if it doesn't, then the trading course is there as a gift for you. And it's no throwaway trading course. This is not a 40-page PDF. This is a monster of hundreds of pages of PDFs and almost 30 hours of video. And it really is a rigorous, almost academic education. So I would encourage you to go through that. And also, please like, subscribe, review the podcast. Tell everybody you know about this. This is a brand new podcast. Here in a few days, we're already climbing up the charts. I'm seeing some of the rankings, and that is because of you. That's not because of me. It's not because I'm creating such scintillating podcast episodes. It's because of your support, and your support is very important to me. I thank you for it. And please, if you've not already subscribed, iTunes is a very good place to subscribe, but any other place you find the podcast, and just tell everybody you know, particularly as I drop episodes on different topics. If you see somebody could help, please pass on the link and help other people to find my work. So that's all for today. I will be back very soon with another episode, and we'll dig into how to cultivate that evidence-based approach to trading. Thank you very much.
Well, it's never hard